just want to do a quick checks before we all begins. Right, say hi in the chat box. Let me know that if it's all clear to you guys. Okay. Now, hello Linchi. Right. Hello Boons. Hello Hafiz. Hello Simons. Hello Forrest. Hello Cut. Hello Shima. Hello Raymonds. All right. Hello Q. Hello Chinfukat. Hello Chan and hello Grayson. All right. Hello Adrian as well. Now, from last time to today's, right, what is the thing that happened exactly in the markets? I think that it will be best that we just speak from data itself. Now, to look at the data, right, usually this is the practice as traders. We usually will look into, we call it as multiple dimension of what's happening. Okay, we usually will look into multiple dimensions of the data point first before we even conclude anything. For examples, hold on a moment. Okay, now for example, the first thing that we look at is a general market. All right, now a general market is like a dollar index or stock index or crypto index. Now this kind of index or even like a super big market to indicate that overall what is happening in the market. Now what you guys can see here is that we will look at the dollar index first. Now, this is the dollar index whereby dollar recently has been pretty much in the range. Okay, like up, down in this kind of range. And this kind of range is actually indicating that recently dollar was not being volatile. Alright, which is, yes, this is expected. But then in terms of the specific market movement, right, it is extremely volatile. Why did I say so? Now look into this. Since the 1st of June until now, the market is extremely volatile. And you look into the price movement itself. Now previously market was like a zigzag up and down movement. Down, up, down, up, down, up, down, up, down. And recently what happens, right? This kind of movement is like normal. Recently, after June, right, suddenly have a big drop, suddenly have a big sharp, big drop again, up again, down again, up, down, then like this. You see, it's like a lot of vertical movement. Right? You see this kind of movement? It's like sudden big drop, sudden rise again. Compared to this kind, if one goes up, like it takes multiple days to slowly goes up, right? Multiple days. Now this one is like sharp up, then sharp down, almost like a vertical line. So this kind of market movement, right, I immediately classify as an abnormal market. And I asked my team to broadcast to you guys that recently the market is extremely abnormal and it's not favorable to a strategy called like anything related to RSI, stochastics, or anything related to support and resistance as well. Because this kind of market have pretty much nothing to do with support and resistance. Like even you said that there's a support and resistance here, it's like as soon as like it does not range, right? You see, market does not do like this kind of slowly ranging, slowly down, something like this. It just sudden spike down, up, down, up, down. And this is happened into dollar index, meaning that overall, any market that is related to USD is having this kind of behavior. And we can verify this from other markets like Euro USD. Now we can look into this, right? Just single days Euro USD itself. Okay, single day, yesterday from this peak until here. One single price movement dropped by 1,500 points. Okay, 1,500 in a day, which is like 2 days of Euro USD volatility. And in the past, the volatility is how does it move? You see, this is like slowly, perfect, sudden drop line. Now, after that, what happens? I can accept that it can go out, right? It is like actually a pullback of Euro USD. But then, first few days is okay. Suddenly have a big up, range, big up, range, then like a square drop. This happened to Euro USD, and then this happened to GBP USD. Okay, you can see that there are lots of square in GBP USD. Now previously it's like normal zigzag. This is what we can accept. I mean, this is like a normal market will do. Okay, normal market up, down, up, down. But this kind, sudden up, sudden down, sudden up, sudden down. And why I say that this kind of market is not so suitable for RSI related market is because that if you use RSI to look into it, now conventional one is like this. Okay, previously we was expecting that the market was continue to slow down, which is, you see, why we having this kind of expectation is that, you see, RSI previously was being narrowed down to a certain range, right? And has been narrowed down to this kind of range. Hence, we're thinking that volatility is actually pressure being reducing. Okay, and what happened after that is that, you see, RSI has been growing up. Okay, and then suddenly goes back down again. So this kind of like sudden volatility, which we have changed a few of setting to a huge volatility that we think around here, which is not opening any trade at all during this period of time. And if we lower down, what happens is that it also makes it much dangerous to enter the trade. For example, you see this kind of market upturns, right? How does the DGV2 exactly enter the trade is that DGV2 enter the trade is as soon as there is an entry opportunity, it will immediately enter. So you see this candlestick have a RSI of 70. So he will try to sell, sell, sell. And then by default, the DGV2 setting for passing the profile, right? Okay, the DGV2 passing the profile, the one that we teach in the accelerator. Now this one, we are, let's say that for GBP/USD, we are using a very, very high lot size, for instance 0.5 lot all the way to 1.0 lots with a lot multiplier of 1.5 all the way to 3, right? Depends on account size. So for this kind of problem setup, right, the aim is that we have 3 trades, and then when we have 3 trades, we expect that it will pull back already, because after this trade is about 400 to about 700 point. Okay, and that is what is calculated. And within calculation, right, it goes overshoot and it coming back down already. Yes, from graphs wise, we can say that it is indeed coming back down. But then in order to indeed capture this kind of profit over here, we need to have at least 4th trade, and maybe depends on luck, you probably have to enter the 5th trade over here, so that only when it comes down, you will be entering trades. Now, most of the times, this kind of extreme volatility that it keep on extending afterwards is actually the big, we call it as the downside of high risk setup. Right, this kind of high risk setup is like, it is a shock to them. So this is what is happening in the market. I'll just tell you what is happening, and later we'll tell you what is the plan to move forward. Okay. Now, this is exactly the opposite side. You see, from the point that it touches RSI set 30, right, which is here. When it touches, which is here, and it still continue goes down to here, which is moving around 650 point. Now, if your lot size is extremely huge one, for example 0.6 and 0.7, that means that your account is likely to be cut off here and then cannot be recovered, right? Even though I know that it has been coming up, but coming up, still coming down, up, down, it's like this kind of thing, right? RSI is like not better represents the market, and we need to understand why is it happening like this first, and we also would like to justify that is there any fundamental shift or not. Because what we notice is that, you see, previously GBP/USD was being coming down, alright, all the years coming down, and now it's like slowly moving back up already. If you carefully have a look, starting the market have a potential upside move of the trend for GBP/USD. And for Euro/USD wise, we can also notice that it is the same effect, right? Slowly moving up. This is for currency. And for USD/JPY, you can also notice a very, very weird behavior, whereby USD/JPY is also going up. Because suppose the relationship is like this: when Euro/USD goes up, USD/JPY supposed to come down, mean that either of this is abnormal. Okay, either of this is abnormal. Then we have to justify which one is abnormal. Is it USD, JPY, or Euro? Now, recently, I believe that the most news that is in the market is actually USD, which is in the last Wednesday. I mean, this Wednesday, Federal Reserve have a report and telling the government what to do with the current economy and what is their plan in the future. A very shortcut answer for this is that you can use this CME Fed Watch tools, right? This one is a very good website to use, right? You guys can use this website, you can just bookmark it or just Google search this, because over here you can have a predictions what will be happening in the future and what is the probability that they are expecting will happen. For example, you see over here they are predicting that, right? They are target. They're predicting that right now in the month of July, which is next month, about 30 days time, the rate, right, the federal Fed fund rate is going to increase us from right now of 5.25% all the way to 5.55%, increases of 25 basic point. And if you forecast all the way to the end of this year, right, 2023, pretty much that most people agree that interest rate, I mean the inflation rate, interest rate, the target rate that will increases is going to go to 5.5% by the end of the year. But at the time, there are already people predicting go to 5.75 and all the way to 6%. This is likely to happen, but we are still waiting to what exactly is the plan of Federal Reserve right now. And based on their plans, there are lots of investors are waiting to take corresponding indicators, corresponding action already. Right, so these are some of the things that you can look at. And yesterday, the video that I'm sending up is actually explaining about this thing. All right, if you go and Google search, right, Federal Reserve testimony live, then you can find these articles. And I believe that this article summarized quite well. There are lots of other info that haven't been explained, but from these articles, we can come out with the causation already. So yesterday, the one that I just record immediately when I read all the news, but here I just put it up the causations, okay, which is I explain in the term like this first. Okay, so I think that I better explain. Okay. Now, here I put out a few things. Actually, what is the things that people are looking at and what is the most influential fundamental right now? Now, there are a lot of fundamental indicators that people are looking at, but for our case, the real fundamental indicator that we are looking at that is really affecting the market is actually the inflation rate. And inflation rate is a combination numbers of two fundamentals, which is CPI and PPI. Now, just think of this way, CPI is products, okay? PPI is service, okay? Service based. Now, how to remember this? Now, just remember that C is like C for cup, cup for coffee, okay? And then P is P, all right? So one is product and then P will be service. Now, right now, the inflation of the markets of US, you can go and Forex Factory, have a look. Okay, just search of the CPI. Okay, I filled up for USD market first. And we look into CPI data. Now, you can see that CPI right now is 4%. Okay, CPI right now is 4%. This is a yearly CPI, which is much better than what being said in the market. And at the same time, you can go for PPI. Okay, PPI is service-based, and service-based pretty much has been stagnant within a certain range, which is like what happened earlier. This is what they needed, right? This is what is needed. But this is happening right now. So PPI has been achieving well, meaning that service-based line, the result is pretty good. But the core CPI remain very high. Alright, core CPI means that product-based CPI or product-based inflations in United States that excludes the price of the oil. If you include the price of the oil, right, this is CPI. So right now it's still continuously dropping. Right now it's for about 4.0 already. Okay, in a way, what you can say is that you can just take these two numbers plus together. That is pretty much the inflation right now. The simplest way to calculate. But there is a better way to calculate. I mean, there are better indicator in the market, which you can go to find for trading economics. Okay, then it's US inflation. Okay, this is the economic data that most people are taking in. As you guys can see that right now is confirmed to be 4%. Okay, and did you know that what is the targets of the inflation of the United States? The target is is 2%. Now is 4%. In a way, what they are saying is that right now the market inflation is actually 2x more than the normal. Then they will definitely would like to pressure it down to 2%. And in order to do this, the only way is to how to pressure it down. The only way is to increase the interest rate. Now, before we go to the interest rate part, right, let's have a look why exactly the inflation is very, very high right now. One of the key factors is actually the labor market, which is anything related to NFP and then unemployment rate. Now, how does this labors affect the inflation? Basically, labor, right, is the people that willing to work. And right now you can see that NFP has been a lot of job openings ever since MCO time. Right, so we look into NFP, right, which is non-farm. Okay, non-farm payroll. So under a non-farm payroll here, right, you can see that the job opening after the COVID period is always higher than forecast. Forecast mean that this is what public expecting the US is going to be, but the blue color is exactly happening right now. You see, since May 2022 has been over a year, there are lots of job opening right now. That means that there are lots of opportunity that you can find the work, and it's getting more and more every single month. And then for the unemployment rate, right, you can see that it's being stagnant at very, very low. Last time was about 4%, if not mistaken. Okay, last time was about 3.5, which is around here. Right now it's being like go all the way. At one point it's even like 3.4, the lowest in the past 10 years. So that means that there are lots of people able to get a job regardless their skill. Okay, so that means that job increases and then the people indeed got job. Okay, and what does this mean is that when you have a lot of job opening, that means that market demand is high. Demand by who? By company. So there are lots of companies right now in the market. They're having a huge demand, and when the demand is high, supply remain. Where does this supply remain? The people that are working is remain. Okay, what will happen is the salary, alright, which is the price is equal to the salary. The salary increases. US people can demand higher salary right now. And when they can have demand higher salary and they indeed have a stable job, what will they demand later is that they will demand for better living, right? Could be like product based. I want to buy better phones, I want to buy better phones, better services, better anything, alright? But most of the thing is related to small end product. Okay, what are these small end products? Something like YouTube Premium, Netflix, all right, Google's, right, those kind of entertainment, more of that. Because of this kind of thing, right, what will happen is that, especially buying cars, right, let's say that this is the average price of a certain product. Let's say the average price of a car, okay, that people willing to buy. And then this is, okay, sorry, this is average price, okay, of car. Okay, up and down is average car. And then left and right, this one is the sales volume. So for example, let's say the car people willing to buy normally around here, okay, which is around $100K, for example, 100K. Then that means that there are even more and more people willing to buy at lower price, right? Then there will be also people that willing to buy at higher price as well. So around this kind of range. And it will form this kind of volume profile. Okay, it will form this kind of volume profile. Now, what exactly happened in the market is that because they are having more salary, have a better living right now, and what will happen is they are willing to, instead of buy at 90K, they're willing to go to buy at 100K, this kind of pricing. They're willing to buy at here. They're willing to buy at here. Okay, because their salary is higher. So they are sort of like pressuring the price to go higher in a way. Because of this kind of phenomenon, they result in the inflation. Okay, the actual one that result in inflation, other than external factor, of course you can say about crude oil. Okay, but the internal factor that cause the inflation remain high is labor. And then the interest rate, what does it do? Number one, cost of business. Okay, cost of business, cost of dollar, and then reduce volatility. Alright, reduce not volatility, liquidity. Alright, three main factors, three main effects. Now, right now the rate is, let me see. Now the rate is 5.25%. Okay, and where do you know this thing? Now just go to Forex Factory, go to Fed Fund rate. Okay, Fed Fund rate right now is 5.25%. Yes, it has been stagnant, as I said, it will be stagnant for like 2 months already, which I suppose that this month will be stagnant. I mean, next month, right, will be stagnant as well. But right now, Federal Reserve said that, hey, I think that right now the interest rate remain very, very high. Okay, I mean the inflation remain high. I would like to pressure it down further to 2%. Okay, and how to pressure down? The only way, and it's the best way they do, is to increase the rate from 5.25. Right now, they're expecting to go to 5.50%, 2 basis points in the month of July. And they announced that by the end of the year, it's going to increase to 5.6% to 5.75%. End of 2023. Now, based on this, right, then the direct effect is going to be a cost of business increases. What does it mean? Business have business loan, all right? And when have business loan apply, right, the cost of doing business is getting higher and higher. And when the cost of doing business is higher, right, what they do is that they will start to higher cost increases, then less cash flow, right? Meaning that all companies start to spend less cash flow. And what and now is that because the cash flow started to reduce, then the hiring effect will reduce. Okay, this is what is looking forward, right? Potentially will happen or right, we don't know. But we would like to see that this thing happen, right? Because if hiring reduce, then only then the labor here will be reduced. Okay, which is here. So in fundamental analysis, right, it always a cycle, right, which is to close back the loop. Second thing is about cost of USD. Now, cost of USD means that the cost of you spending money for free, all right, like you are doing a lot of job, right? You are spending money for better living, buy here, and there, right? It will ends up you are getting harder and harder to make money because your company also making less money. And what will happen indirectly is that more company is going to be having the chances of bankruptcy. Okay, I do foresee that in the future there is going to be more banks or other company that related to interest rate, especially those that related to loan finance. They're likely to end up bankruptcy very soon in the next 6 month time. Okay, but not so soon. But as soon as the bankruptcy started to happen more and more, people will start to get afraid and they will stop spending money. Instead, they will start to from spending to saving. All right, so people tend to go for saving market. Now, when go to saving, right, that's actually lead to the next one, right? Reduce liquidity. And reduce liquidity means that you don't simply spend, you are safe. Now, in US people, where would the money save to? Save to SP 500 stocks market. This is a place that they know the most. Another one is housing. Other than that, you got fixed deposit, you got bonds, and then you got store as a cash. Now, obviously, store as a cash, no point already because fixed deposit is you can get about 5.75% return just from the fixed deposit side, which is like free money. Why not? And housing wise, because the loan is so expensive, people are afraid to go to loan right now. Instead, S&P 500 is at a low price, so people are going into S&P 500. But also at the same time, there is a uncertainty for S&P 500. Now, what is the uncertainty? Now, of course, S&P 500 is those company that is like top 500, the best in the US already. But then the cash flow in the US is getting lower, and that is uncertain factors here. What if that more and more companies that collaborating under S&P 500, right? Their clients are their business owner getting bankrupt. That means that the company portfolio S&P 500 will be getting worse as well. And hence, people have thought of this one is uncertain. How about there is one more, gold. Now, instead of comparing to gold, right, they are thinking that actually gold is not growing anyway also, right? Because you see, fixed deposit is like keep on increasing. In a way, right, regardless how you enter is surely getting more and more money in the end. So why should I invest in the gold market that generating 0% ROI over a year one? In a way that if you don't trade gold, right, you just invest, you just buy gold, it's generating 0%. Why would you go to buy gold? Why don't I just go to fixed deposit? And compared to fixed deposit, right now the bond rate is need to be getting higher as well. Just that right now the bond rate will not increase so fast. So this one also cut off, this one cut off, mean that more and more people will put money back to fixed deposit, and in a way that the liquidity reduce, and hence the market will start to slow down. All right, this is actually the main reason of interest rate increases. Now, knowing all these things, right, then we can do a bit of forecasting in the future. What will happen? In terms of forecast, we'll cover a few things. Number one will be on the stocks market side, which is S&P 500. Now, S&P 500, there are too much uncertainty. Number one, you can see that cash flow is going to be downside. But then at the same time, people is going to go for saving. Saving may go back to S&P 500 as well. So we don't know that which part the client, right, which is the US people will focus to. So this is potentially in the future, we unknown. Other market is like bond. Okay, last time I said that bond market have a high chance that it will start to goes back up, all right? Because fixed deposit start to be stagnant. If it's fixed deposit stagnant, people think that fixed deposit is not better rate than bond already. Why don't they just go for bond? So bond may continue to go higher and higher. And right now the case is that fixed deposit rate start to increases back again. And when fixed deposits increase, the bond price actually reduce. So likely that in the future, bond of US is going to lower down. And at the same time, gold market. Okay, before the gold market, cash market first. Cash market is like US dollar. This one is quite straightforward. When interest rate increases, then US dollar will be increases as well. So when your dollar increases, gold market should drop further. Okay, that is like what will happen in the future. And that summarizes everything. Okay, that summarizes everything regarding to the current market's effect right now. And every single thing that I'm explaining, right, started with a cause. All right, let's do a summary. The cause is because of a lot of labor working right now, they have a good salary. And they have a good salary, it costs them willing to spend to get a better inflation, all right? And this inflation is actually the cause of why right now Federal Reserve would like to increase the rate further, because this is not allowable. They would like, this is a target they would like to achieve, 2% inflation rate. So the action plan is to increase the interest rate up to another 25 basic point, or all the way to 5.75, another 25 basic point again. And with this happening, right, the real effect is that now the cost of the business increases. Right, this is the biggest effect. This is the effect. And you do understand that when the interest rate increases, the effect is going to be affecting every single one in the economy, including publics, companies, SME, regardless who you are. But then the biggest effect is going to be on the big company, multi-millions company, because their loan is not like 5 figures, 6 figures, immediately more than a millions one. And there are millions of loan, or there are millions of fixed deposit in the bank. With that small percentage changes, right, it's like 1,000 or even 100,000 hours of interest is going to be calculating. Right, it's a huge number games that running behind all the big scale company. So in a way that the effect, the negative effect is going to be more on the business side. And with that said, after we have this, knowing this effect, right, then we do a forecast. Now the forecast is that now even though the interest rate increases with the current market, I still think that, all right, I still think that the S&P 500 have a chance to goes up, right? So this is all of the market forecast. Forecast S&P 500 is going to goes up, bond will comes down, dollar will goes up, but then only gold will come down. Right, this is what likely to happen in the future. And why S&P 500 will goes up is because instead of go to put into fixed deposit, why don't they just go to put back to the stocks market? And I believe that right now there are even more and more people start to talk about that, hey, it is a time to buy S&P 500. More and more of this kind of people coming up already. So which is something that's a positive news, right? S&P 500 likely to goes up anytime in the future. Okay, so guys, you can take a screenshot of these pictures and we'll go to the next topics. Right, before that, is there any question that you guys would like to ask? Okay, if it's all clear, right, I can type a clear into the chat box. Or if it's something that don't understand, I can repeat as well. Okay, yeah. After all this thing has been completed, okay, this is on the fundamental point of view of our analysis. Then we will go to seasonal wise of analysis. Now, seasonal wise of analysis is something like this. These are seasonal effects on, we call this as July. In July, right, what will be the market have a most likely to come down? So by default, right, by default, supposed to be USD JPY, which is, I would hope tell you guys that, hey guys, USD JPY for July have a high chance to drop already, so you guys can prepare on it. But then right now, put a hold on this. Don't sell USD JPY. Okay, don't sell USD JPY, because with the current market abnormal, and we have to wait for a few more days or few more weeks until Federal Reserve can actually confirm that whenever they'll increase or not. If they don't increase, then yes, dollar will come down. If they increase, then dollar will go back up again, and then USD JPY will continue to go up further. So it's not something very good to sell USD JPY for now. But with that said, we can look into the downside. The probability of Nasdaq S&P 500 to goes up, This is come down, goes up is actually 1 minus this one. Okay, the probability of S&P 500 goes up and also Nasdaq goes up in the month of July is actually 72 to 76%. So you guys can take out these two markets, which have a very high probability to enter the trades already. And in terms of Bitcoin, that it will be coming out in the July, right? Bitcoin will coming out in the July as well, right? But I'm personally not trading on Bitcoin. So if you are a crypto trader, at least that you know that this affects. And right now, Bitcoin is already starting to go up. Now, here you can see that this is a Bitcoin market. Has been very crazy happening in the last few days. Right now, it's about 30 over thousands. And I'm pretty sure that it will go to 40,000 in the next month. Right, just a matter of time and matter of speed. Right, around 38,000, right, which is this area. Okay, I marked this area volume profile. Okay, this price. Very likely that next month, okay, in case of all the factors that still remain right now, Bitcoin have a high chance that from here it goes all the way back up to here. Okay, which is 38,900. Okay, that is expected. Now, other than this, you can look into specific on the weekly as well. On the weekly seasonal analysis, we have come to study every single market, and we would like to know that the market is not like 50-50. We would like to know that the market that is more aggressive, something like big volatility. Okay, this one is volatility. We would like to have volatility markets, which is the market that is more trending. As you can see right now, Nasdaq, S&P 500 have a super high chance that at a week of 26, 27. So this is at a week 27. Okay, S&P 500 and then Nasdaq have a high chance that will goes up in week 27 and then at week 29. All right, these 2 weeks. What does this mean? This means that you can start to, as long as it come down, you can slowly collect your tickets to expecting that the stock will start to go up in that time. In fact, the market has been going up a lot recently. Okay, almost there's no chance for you to make a buy trade. So if it can drop further, okay, then it will be best chance to enter, right? Especially for a swing trade, which is around here. Okay, around 4,100. It's about 4% drop, which is quite far. Don't think that will drop so far. Likely at 4,002 here first. Okay, which is here. Okay, around this ranging. Now that is for S&P 500. Now, of course, Dow Jones will be going up as well. Right there, like almost like in a pair. The market that will be going up as well is Euro USD. Okay, that is under the expectation whereby the market itself is being, we call this as dollar is going to be weakened. Okay, I do expect that Euro USD will be going up, but then with the current new dollar, I am sort of like pulling a handbrake on dollar trading right now. So yeah, that is not a good market to trade. Now, in summary, right, what will be the good market to trade in the next few more months or next few more weeks is that S&P 500, Dow Jones, and then Nasdaq, and specifically at week 27 and at week 29. So how you can do with this is that, now, of course, when you want to buy low using RSI, it is very hard. You want to buy low using support, also very hard. The market just a bit abnormal. And what we've been found is that in order to be trading on this kind of market, right, then we will be using another type of indicators, what we call it as the MA cross. Now, I believe that everyone do have this thing, all right? Now, the benefit of this MA cross is that, let's say that you can use it in any lower time frame. Okay, it will tell you that when it cross, it will tell you where to short it, which is where to sell it. But when it come down to a certain point, it will reverse already. When it start to reverse, anytime when it reverse, you can make a buy trade, right? Just to trend follow it. Now, moving forwards, the market trend that is more suitable right now is to do trend following strategy. Now you see, when it cross out, there are lots of opportunity when you can take. Like the market is extremely trending right now. So that's what we have been expecting happening in the future. And of course, you can set the setting accordingly and then get a signal. Right? So this is what being explained earlier in the previous video, right? Which is a trading view. You can actually set a alert system. Okay, as long as there is any buy signals, just send it to your phone. All right. Now, the next question that I would like to ask is actually the day trader routine and then using Ultimate Closer. How does it use? Now, the day trader routines is basically what I'm doing, all right? But it's not until every day you have to read the news lah. Okay, I read the news almost every single week, unless there is a specific, extremely, hugely volatile market happening that interests me, then I will definitely look into the setting. And the day trader routines depends on your off time, but then usually I will start to trade at around 8:30 p.m. all the way to 11:30 p.m. Right, so that is actually the time range that I'm doing trading, and I'm using UC to do the trades. All right, now there are requests to do demo trade on this one, but let me summarize first. In terms of trading, right, I pretty much have been print out and write down in my papers that what will be the action plan to take in the next few weeks or next few months. Okay, and with that kind of prediction moving forward, you have prepared your own indicator that you would like to do the trade. Now your own indicator can be RSI, can be moving average, doesn't matter, right? It's just an indicator to simplify the charts for you. And then when you are doing trading, then you can use any time frame that has been proven traded to be good in the backtest, like what I showed in the UC video over there. So let's say that you are an experienced trader. Okay, you are experienced trader. Then definitely you can aim to get on UC in 5 minutes. But if you are a beginner, then you start from 1 hour time frame first, then only slowly goes down, right? If in backtest you've been profiting, 1 hour profit already, then go down to 30 minutes, 30 minutes go down to 15 minutes, and all the way down, right? Max minimum to 5 minutes. The reason is because lower the time frame, the more the profitability they can take, man. All right. So this is something that you guys can take into the considerations. And now the next one is about the profit updates, which is I will talk about it in a moment. But right now, let's do a demo. Now, just to let you guys know, I'm likely to update the robot very soon, by this week or end of next week. Okay, so if you have the robots, do double check on the emails. Right, we're gonna send an email very soon to notify you guys regarding to the robot updates. All right, by moving forward, the robot update will require you guys to do account register, which is something like this. And in your account register, right, all you need to do is to just key in your email when you're registering with us. Okay, just key in your email, then click OK. Now, in the event whereby you have multiple MT4 accounts within the same broker, you would like to register everything together, right? What you can do is that click here. You can just type, let's say that I get account 123, comma. Okay, 123, comma. Then 456, comma 789. Okay, 123, comma 456, comma 5. Okay, doing like this. And when you're done like this, then you just click OK. Then it will automatically register your account. Okay, and it will automatically update the reward program. So this is what being done right now, and in the future it will be much seamless process. Okay, now moving forward back to our robots. Right now we have a robot which is a lighter version of UC. Previously we were using Ultimate Closer, which is all good. All right, Ultimate Closer. But then the problem is that Ultimate Closer may be slightly slower in some computer. So in the last group coaching, we have been talking about UC Lite, which is a easier version of Ultimate Closer. Of course, if there is any bug that you have been noticed on this new version, let me know so that I can at least quickly run out a new updates for you guys. By far right now, there is not much problem lah. So let's say that you are doing trading, right? Let's just take Go example, right? So for gold markets, you want to use UC to do the demo trades, then you need to tick this vision mode so that you can see the chart how it moves. And I choose usually 1 month period so that I can just practice within 1 month periods. And now setting here, of course, lot size I will be changing. Number one, if I'm having 10k account, okay, if I'm having 10k profit account, I will go to have a lot size of 0.05. Okay, and definitely I need to set a profit drawdown cut loss point. Okay, now for beginners, right? For beginners, the drawdown cut loss point you may skip first, right? You may not necessarily to set this profit cut loss point, because for this cut loss point, it actually will restrict your strategy at the first. Okay, and if you are very beginners, just ignore this first, right? So let's say that I just ignore, and then you can go for a few other settings. For example, now the question that we asked to me, right, is that, is there a way to increase the profitability of the UC? Yes, there is. And basically it's all came to minimum profit before closing the trade. The minimum profit closing the trade, right, is actually quite a big factors of how profitability of your trade is going to be. If you put 100 points, of course your win rate will be very, very high, but your profit amount in terms of dollar amount will be quite small. So usually we'll increase this to like 10% of gold volatility. How much? Now in the Telegram bot group, you can type /day trading gold. Okay, and usually I will take for this number and then 10% of it. Usually it's 5 to 10%. 5 is right now, so I take about 10%, a slightly more profit. Okay, and this thing definitely can go even higher. So there's no restriction for this part. So it's like 2, 3 trade. Okay, I just run all of 240. I click OK, and I can proceed to start. Now, while it's starting, right, usually the indicator that I'm using to trade is RSI, Relative Strength Index, which is this one. And I am going to use a moving average as well. Now, moving average is most of the time just as a baseline on it. Okay. The baseline that I'm using is moving average 20. And in a way that this is just telling me that, okay, this is where the average in the past is to make me clear on it. Okay. Whenever I exactly follow 100% to use it, not really. So here of this. Now, when I do the analysis or any kind of trading, right, then I will definitely need to know that in the past, how high or how low it is related to the past. Okay, I don't focus on the current candlestick because most important part will be historical related right now related to the historical price movement. So right now I can see that the price is coming down. If I can speed up. Okay, so right now what I'm doing is that now relatively to historical, right now the market is lower, right? Okay, lower. And then could it be going even lower? Yes, it can be. So likely to be somewhere here. Okay, so it's seeing that it has been coming up. Then here I will be opening for a buy trade. Not really. Okay, why? It's not standing strong above here. Okay, above here means not this moving average. Above means these two candlesticks should be standing above. And this will be my baseline. Right, this is my lowest point. So if this confirm breakdown, I will make sell. If this continue to move higher, I will make a buy. So just continue to wait until showing better signals. Now, of course, most of the time we just waiting right? So it is been showing going up, right? So I will likely to enter for buy trade for now. Okay. And you see, when I make a buy trade, it moving higher, right? At this point, it will potentially looking for a place to exit your trades already. And anyway, here you will start to do dollar cost average. But what I would like to do is that I will not just let it under dollar cost average here. I will let it, let me think, here to here is about 280 point. Can actually, I would like to let it dollar cost average at this level. Okay, and then we let it drop. Okay, so abnormal markets. And then we will have a look for continuously. It is actually a good news that the market does not crash below this, which I think that have a chance right now. Okay, I let it. Okay, you see, right now it's the minimum point of 440. Here to here is about 240. Okay, then we just leave it to be. Okay, leave it first. And what I would say what is the thing that you would really need to do when you are trading? Let's say that as a day trader, right? Most of the thing you are just waiting on. Okay, and you need to know that what you are waiting for. For me, I'm waiting for a jackpot. A jackpot means that the price suddenly spikes up, then I close for profit, which is that part automatically being handled by the robots. Now, the thing that I'm looking at is the potential reversal signals. Okay, not reversal in terms of buy, reversal in terms of sell. You need to just take care of the risk side, which is right now. Because what is the thing that does not happen will cause another side to happen. Okay, which is for this part, I would think that likely to need to close 50% first, right? Remove half of the risk and then we see how it will goes later. Which I think that this trade need to be stop loss anytime soon. Okay, so it has been profiting. Then we wait for a while. Okay, it has been closing here. Now, what I will do right now is that it has put break even. Okay, the reason why I exit here is because it's foreseeable that the market risk is like pressuring down. And definitely for the risk management side, I will close it regardless of what I'm doing, right? I mean, regardless of how much profit that, or whatever the analysis are. If I say that potentially will be going up, even though right, just now I said potentially will go up, even though potential goes up, if I foreseeable that it have breached to my limit, which is just now is here, I will actually close my trade one. Okay, so let me think. Right now, I will likely to scale in buy again. Yep. Right. It has been ranging, right? I don't take action right now. I'm waiting for candlestick movement to be even more significant first. Significant in terms of more obvious movement. So like moving up like this. Okay, this action is what we call this as scale in. Okay, scale in means I think that the market have a high chance to go up continuously. So I make additional one more buy trades that potentially will go down, and I use this to cover it back. Okay, suppose that I should enter 2 buy right? Suppose I should enter 2 buy trades here, but fine. Now, here to here is about how much? 2,000 point, right? So market is abnormal. When it's abnormal, usually I will do a sell, right? Usually I will do a sell, expecting for a pullback like this one. And I'll sell again. Now the reason why I'm selling again is because I'm pretty sure that this thing will come down even further. Have a good opportunity, why don't take it? Alright. Okay. Like abnormal, okay, usually not so fast to come down lah. Now, a lot of people that they would like to enter the trades, good, right? Like what do you see here? I enter the trade, next time market started goes out already. I enter the trades, market few candlestick goes out already. Okay, this one is not me lah, right? The bot enter one. This one I enter, market goes out, I sell, market goes down. Is that you? Okay. Where is the market happening right now? Okay, I think that's all for the day. Okay, I will likely to just don't do anything, even though I think that the one to sell right now, 很理智. Now lah, alright, this kind of market I don't like to trade. Okay, I mean, just to say this kind of market is my weaknesses. Okay, I do know that I don't know how to trade in this kind of market. It's like a lot of big long tail, long head, up down, up down, up down, up down. I don't like to trade one. Usually this kind of market is always the big factor that causes me to lose money. I want to press sell, then it goes out. Then I want to press buy, it comes down. So this kind of market, I know I can't handle, so I just ignore it. But I do know that other students can handle this very, very well. So if you can handle this well and you found that this is part of your talent as well, why don't? Alright, just go ahead. Why are there few XXX? Why you did not do any trade? I am doing trade. Right, these are all the trade that I'm doing. So the X is actually the exit. Right, this is the robot auto exit, auto exit, auto exit, auto exit. Okay, this is auto exit for me. So in a way that once you enter the trade, then the rest of the thing you just let the robot automatic exit for you, lor. Now I think that that's the end of the day, and then we speed out to the next day. So usually the trading time, which is right now lah. Okay, now right now you can see on the market watch is about 1.6. Okay, and 8:30 is about 1.500. Now depends on your trading time. If you are available even in the or London session, right? What you guys can do is that you can even trade around 7 until right now. So I mean broker time 7 until right now. Now here we see that market goes all the way up and then coming back down to here. That actually indicating that market have a high chance that it will be in pressure and goes down even lower. So what I will do is that I will wait till it goes to here, this level, and I'll make for sell. It is go to here or it goes to RSI level here. Okay, either of this. So I will wait and see that which one happens first. Okay, and which one happens first doesn't matter which one happens first. Right, you happen I just enter, and I don't enter the trade immediately. I will wait for it to slow down. Only then I will enter the trade, which is what I will do. I will look into the chart first, which is likely to be very, very soon. Very, very soon. A few candlesticks later. That showing, right? That showing coming down. Okay, that showing coming down, like pressure down, not like going up. If it's going up, then nothing to do. Just leave it. Just leave it. Just leave it. It's not our opportunity. It's not what I want to see. Okay. So one thing that's confirmed right now is that the market failed to remain below here. That means that if the market fell to below here, that means that market will likely to go to uptrend. So what I will do is that I will make a buy trade right now. Okay, you see, this is my buy trade. And if it comes to here, I will dollar cost average. If it come back in again, then I will cut loss. Now, with the current market volatility or this kind of abnormal movement, I definitely can aim to capture bigger profit one. You see, you can use this profit plus and then profit minus to adjust this. So I likely to increase to 400 point. I believe that, I not believe that, I think that it will have a high chance that it will go to there. To the upper side. And we wait for a while. I will cut loss if it come down. I will cut loss if it come down. Cut loss means I will close 50% first, and I'll see how does it move. If keep against me, I will stop already. Okay, now break even already for the first time. Right, here is break even. Here is second time, and the third time ended. Okay, I closed 3 trades. And it go high. Very high. Okay, fine. Right, this is like kind of awkward. Okay, I sell at the top. Because pullback, right? Pullback, I don't expect much profit. Pullback 240 is okay one. Okay, as long as it come down from there, I will take it. Right, come down to here a little bit, right? Just from here to here, 240 point, I will exit already. Around 240 lah, not exactly at 240 lah. So right now, just do a summary, right? In the exact way that I'm doing the trade. Wait, I scale out first. I scale out means I close 25%. Meaning I reduce the lot size by 0.01. Okay, I reduce the profit even further. Now the thing is because market can go even abnormal. As long as there's any pullback, I will cut it fast. It seems that you do not use any RSI to make any adjustment of my trade. Yes, especially if you're doing scalping, right? When you're doing scalping or any type of like fast in, fast out type of trading strategy, solely depends on indicator to enter the trade will not be something good. Okay? Slowly depend on the indicator to enter the trade is not a good idea, because like you want to enter the trade, right? Here you enter RSI 30, you sell here, die low, right? Go to here, die 2,000 point of drawdown. So most of the time is what we said, look into the price action, look into the price movement itself, especially if you go for scalping. But if you go for H1 like more like swing trading, then fine, just leave it. Okay. And yeah, I think that the market run has been, end of the day, it's just back to ranging. So what me doing is that this is something that very dangerous. If the market range above here, have a high probability that it will continue goes higher. Okay, and the lucky point is that the ranging here, right? My sell point is not the lowest, but still have a chance that it may come today as well. So we will need to wait for a while. I think the market has been slowed down, which is on the midnight. Then we have to speed it up. Okay, now what is running, right? Then I will explain this thing to you guys. One of the ways to increase your accuracy in your entering the trade, right, is look into the candlestick or even accumulated price movement. The reason why I'm holding confident on this trade, on this sell, right, even though I've been scaled down by 25% right just now, I have been close 25%. But the reason why I'm okay to continue to hold it is because I can see that most of the candlestick is stay below 1. What does it mean? If I look into the price movement like this, okay, you can see that the price is like spikes up, come down, range here, and then come down, go back up. Okay, then it spikes up, then range. You see, most of the time it's like ranging below. The idea here is that if it like spikes up, then range below. Okay, spikes up, range below. Spikes up, range below. Okay, it regards that it moving up or moving down. As long as it keep range below, that means that you have a high chance that it will come back down. Okay, I scale in to enter one more scale here. Okay, which is, I believe that this is something that spike, come down, range already. Okay, then spike down. This is just like manipulation a little bit. Then spikes up, come back down, range below. So right now, my action plan will be come down here. Not sure it will come down or not. Which is here. Okay. I believe that this thing will happen like this first. Okay. And then we'll have a big spike. Okay, as long as there's a spike, you can just cut it already. The reason why I will cut it is because I got too much trade right now. Okay, I got too much trade right now. I have to close all anytime. Okay, pretty much ranging at the top. I scale it one more time at the top. Okay, don't do like me. Okay, I'm ready to close 25% anytime one. Okay. Now I've been closing all the trades and I think that market you see the market like stagnant at the top, which have a high chance that it will go back up. Okay, have a high chance that it will go up. So I don't simply enter the trade right now. I want to see that if I want to go higher or lower first. I wait for a few more movement to clarify. Okay, I close all right now over here is to quickly remove all my risk. Okay, of course you can say that I'm not closing at the best, but this is what we call as risk management. Okay, I scale in. Okay, you can see I scale it exactly when it come down to actually quickly close all the trade in profit one. Wow, the market extremely slow. Don't know why. Now, how is the gold performance in the next coming months? If Federal Reserve changing the rate increases from 5.5% to 5.75%, or even from 5.2 to 5.5, or even 5.75, the gold likely to continue to drop. Okay, likely to continue to drop. But the seasonal wise, it's actually saying that gold market likely to increase. So there is a conflict between the fundamental and then the seasonal. Okay, sorry. Seasonal say that it will goes up. Okay, seasonal say it will goes up, but fundamental wise it will come down. So who corrects? Who will be correct? Don't know. Gold is a bit confusing in the next month. Ui, the market is not moving. Okay, so right now what I would like to do is that I will do a bet. Okay, I will bet that the market is range above at the top, actually the best action to take is to don't take any action. Go to another market. For me, I will make a buy trade. Here. Okay. Suppose here, but okay. The reason why excuse. The reason why I'm going to buy trade here, right, is because I'm expecting that the range here have a lot of buyer, right? It has been stagnant here, here. After a big up, stagnant above. That means that there are lots of buyers willing to buy at this price. Hence, it can only maintain here. I can take higher profit. Okay. So I've been closing all of my trades over here. Okay. And I think that's a quick UC demo, and hopefully that you guys can get some insights on how I am doing the trades. Now, just to end the session here, pause. And what you guys can see is that the result and then the graph. Now, I can see that quite a number of you guys have been successfully achieved the result here, especially related to the trades. Now, which is what you guys can see. The trade over here is about $100 and under $100 drawdown. The biggest drawdown is over here. Okay, the market that I try to play for pullbacks is pretty high risk, right? Especially I scale it at the back. So the win rate wise is about 77%. I would say that right, most of the people that using this robot can quite easily to achieve about 60% win rate. If you can achieve about 70% win rate, you are sort of near to the profit level. The next level to do is number one, boost out the profit. Okay, how to boost out profit? Lower down the time frame, or enter slightly more trades, or even increase the lot size. Second thing is to lower down your drawdown. How to lower down drawdown? Enter lesser, or wait until the actual point only you enter the trade, which is at the peak or at the bottom. Okay. Now the last one will be the problem updates, right? For the update here, I think that my team has been messaged to tell all of you guys. Right now, the robot, we will say that DigiV2, we stop using it for now, right? We stop using it for now because the RSI-based strategy to enter the trades is not fully applicable in the current market, or at least with the current with the previous setting that we are having, is not fit to the current market, and we may need to have additional 1 more weeks to see that what would the Federal Reserve announce to us. So right now, DigiV2 will temporarily pause it, and the robot is immediate as a replacement will be MA Lite and also UC Lite. These two combination will be a good robot, whereby moving average Lite and then UC Lite have a potential to catch the trend. Like when the market is uptrend, right? It's like big uptrend, it will just catch all the way by up. When market is a big downtrend, it will catch sell all the way down. Okay, so this thing is still in progress, and we are creating a new robot just for this purpose, because with the current market movement, right, we see that foreseeable this strategy, this robot will be performing quite well. And specifically, we've been trying in gold markets. Not this one. Okay, this one. Now for this gold market, right? Let's just go for like 5 minutes. Okay. Okay, we can use any default settings, but then stop loss wise, we remove first, right? Stop loss, I haven't optimized on the stop loss. So let's say that we do it from early of the year until right now. Okay, now the robot that we designed here having 5% risk per trade. Okay, 5% risk per trade. And the purpose is to use this to pass a profit. Why would I say so? Like you can see, the trading period is about 2023 January until end of the May, which is about 5 months time. And 5 months time, the highest ROI that it can ever achieve, right? Now, if you even consider the drawdown wise, which is here, right? I'll just take somewhere here. Okay, you see the account balance can go all the way to 3,000, meaning that 5 months time, I have 300% ROI. And 300% ROI divided by 5, 1 month is about 60% ROI. And it's pretty much a very, very aggressive robot already. Okay, and to show you guys how it moves and how it trades in the bit by bit, right? So, okay, because M5 man. Now, here the idea is like this. Okay, if initially the moving average cross down, right? The simplest one, MA line man, cross down, it will make a sell lor. Then it cross up, it will make a buy. Okay, and this buy trade, it will goes up to here, it make another buy. Okay, buy to buy is like hedge already ma. This one hedging, no profit one. Okay, this one is just to minimize the losses. The actual one is that if the market confirm to continue up, meaning that it has confirmed to cross back up again. If it cross up again, it make another buy. As long as have a net profit, right? This trade from here to here, as long as have any net profit, it will capture for you. Now, another side, it will be sell. If sell come down, net profit also automatic exit. Buy, and when it cross up buy, it suddenly cross down. Cross down again, it make a sell. Handle the losses first. Okay, when it handle the losses, it cross down again, it sell. Hey, it goes back out again. So at least that here, this is the only trade that is losing. Then confirm to be uptrend already, right? Confirm to be uptrend already. It will make back the buy, make the buy. Because the previous sell trade is too huge, so it will just find a way to buy. Multiple buy trade later. As long as got net profit, right? You see, there's more buy here. As long as there's net profit, it will close all the losses over here. Same thing to here, right? So meaning that this robot is trend following. Okay, it's a trend following robot, and it's preferable to trade on more towards we call this as trending market environment. Have you tested this robot live? Now this robot live, we haven't been tested. I mean, we have been tested in live already, all right? But then we only tested for like 1 week time only. Okay, we expect that it will slow down, but then we just put it in. All right, we give a try and we test it. Okay, so far the ROI is about 2% by 1 week, which is lower than we expect. We do expect that 1 week can achieve about 10%, but not yet. So we are optimizing, increasing the ROI right now. And another robot update is that about DGV2, right? Now we are looking into Euro USD DGV2, the cannot work, right? So we are moving out from these cycles to test it on. We have been tested into this market. Okay, AUD JPY and then AUD USD. Right, we're going into AUD markets because previously has been showing that AUD and Euro is moving quite similar behavior, but then AUD JPY is moving more aggressive. So far, what you can see is that this is the setting that we are getting. Even in the any news time, right now it is still performing, right, which is 94% win rate and profit about 1%, all right, which is also been tested about 2 weeks time, right? This has been tested for about 2 weeks time. 2 weeks time, 1%. So what we can do is that we can definitely increase the risk, like times 10 times the lot size. If you can times 10 of the lot size, you guys can immediately pass the profit within 2 weeks. So that is actually the plan. And yeah, definitely we are testing one by one just to keep you guys updated with the robots. The current method that you guys are using temporarily to have a pulse first, right? These are the two robots that we're doing, DGV2 and also MA Light part. What was the backtest result that you showed us earlier? Now, the result that you guys are seeing here, okay? Now, this robot is losing all money at the end of the day, but then what we are looking at is not the end of the day, right? It's just halfway through, which is somewhere here. Okay, 30th. At one point, like January all the way to February, okay? January to February, end of February, you already like $3,000 profit. So it's designed to be aggressive, right? It's a design to be aggressive to pass a profit one. If you want to go for slow and steady, we can easily reduce down. So yeah, the one that you show us where it earn high ROI. Okay, I think that this is the one. Yeah. Okay. Yep, so definitely we are going on this part, right? So don't worry about this. You can see that this robot, we are definitely optimizing on the speed of backtesting a lot faster. Yeah, so moving forward, this is what we will be doing. Now, I think that there are 2 more questions over here, which is on the UP robot lot size calculation, and also this about additional method to do analysis, optimization, and backtesting, Now, these were 2 questions I will be answering to you guys privately because it's kind of technical. So I answered to you guys in your personal WhatsApp lah. Okay, so with that said, thank you everyone of time and have a good day. Bye for now. Right, if you guys have any questions, you guys have any questions, can type in the chat box. No? Okay. Good. Then I will say, thank you everyone. Bye for now. Bye bye. Bye bye. Have a good day.